What's up, guys? Tonight is Monday night scan, not Sunday night. We had today off, Martin Luther King Day, so we had a nice long weekend, get to relax a little bit, get prepared even more for Tuesday. But the most important part is not to show up and just start firing off orders, right? Because we all get excited over the long weekends. We all get excited over the weekends just to get back. And, all it takes is that first trade on Monday where you kind of have that FOMO, you just want to be in the trade, and then all of a sudden that's the start of your week, right? And you miss the A+ setup that you were ready for because you couldn't just sit back and stay off the keys, right? So make sure tomorrow your first trade is exactly what you were prepared to either take or anticipate, etc. So keep that in mind when you come to the desk tomorrow. A lot of new folks in the room took advantage of that verbal special that we had last week. So welcome to all of you guys. You got a really fantastic week. We had a lot going on, talking about SNCA, for example, in the Traders Lounge, kind of as it happened, where not to fight things, and kind of the whole know what you own concept. So we'll get into that in a moment. But I had 4 things that I wanted to go over tonight. And the first was the A+, right? The A+ setups and not getting bogged down by these B or C or D type setups coming off the open, especially on Tuesday morning, right? And so if you think about how many setups we have per month that are A+ that could really change your year, let's just call it 3 to 5 per month, but 1 to 2 like major trades. And if you take subpar trades, you may miss those. And they may start to take your energy, your focus, and they happen over here while you're zoned in with your blinders on a subpar trade. Because that's what subpar trades do, right? They take our attention. They're not paying us. And one of the biggest things that we talked about in the Traders Lounge last week is, we have a lot of new traders, right? And everybody feels like they need to be in a trade. And I missed this. I missed that. I missed it again. I missed it again. And it's just like, whoa, hold on, put the brakes on. Like, wait for the setup. And we were talking about SNCA, for example. I mean, everybody was trying to, call the top, find the top. And I had said, the particular levels to draw a line under to understand where the first stage of resistance would come in. So it might retest that support, and if it breaks it and it starts to stay under that level, then there's a possibility. But just like CETX, just like SNCA and so many others, you never know when they're going to squeeze. And you don't want to be fighting that, because that's going to be taking the energy away from the potential A+ over here, or the potential trade in itself that you're looking at. You're just going to exhaust yourself being on the front side. So I'd rather be a little bit late than to be early fighting it and miss it altogether. So we talked through SNCA. The second point was basically that volume trumps all. So there was 2 points here: SNCA, CETX, and a couple others that happened this week, right? So the most important part is when the volume comes in. I'm not talking about a couple 100,000 shares, then it flips a couple 100,000 shares, and that's it. I'm talking about when it goes 500 to a million, to 3 million, to 5, to 10, to all of a sudden we're trading 12, 15 million shares. You have to recognize that. You have to recognize that that is a different day than the rest. And no matter what the fundamentals say, no matter what you think, no matter, none of these things matter. All that matters is that the trend is holding, the volume is churning, and that's it. Not that I would go long a stock. Just like I said, SNCA, a lot of people were looking for the long and whatnot. I'm not looking for that. I'm looking for when there is a huge amount of volume that kind of goes back and forth. I'm looking for concentration of blocks and offers that just don't budge, right? So it's about to break out, and there's just a huge amount of volume that comes out, but it doesn't budge the offer. That does not mean, this is where a lot of people make a mistake, that does not mean that that's the top. You have to recognize that. You have to recognize, and so for example on SNCA, I recognize that 360s to 375, basically 380s, there was a lot of volume. But again, that does not mean that it's the top. A lot of times they'll be selling, but they'll still be supporting that level. Let shorts kind of get in there, let shorts think it's top, and then let it go. And that's the exhaustive move. And so AGTC and a few other ones recently have done that, where they go against the key level, then they pull it, it rips up, and then comes right back under that level. So look, I had pretty good entries on SNCA. You know, I dabbled a little bit based off the 360, 380s notes that I had taken, the volume and whatnot, but something shifted in the tape around 4, and that's when I started to get short. And then it was oddly heavy in 390s, and so I went ahead and hit some more. And it was just based on seeing what the tape did on the way up, not being exhausted, right? I did not get aggressive on the front side. I was just kind of dabbling, staying focused, waiting for it to, you know, really break out or squeeze or something to shift. And obviously, Algo's probably got the filing or the offering quicker. You know, machines are obviously going to be quicker than humans. So I think that's what I saw at the $4 and $3.90 level. But as it came out, at that point, I just put it on as much as I could on the short side until I ran out of, you know, the borrows that I had. So I was very fortunate to be part of that trade. Very bad pricing, warrants, etc., based on where it was trading at the time, not necessarily where it was trading, you know, the prior day. But it's very similar to what we talk about. Know what you own. And we all knew that was possible. And as it gets higher and higher and volume is surging on those types of days, I like it less and less and less for a long, unless you're talking about, you know, something like a million share float or something like that. But even with that, there's still risk, just like PTSV and a few others. I wrote a blog post. You can search Investors Underground, hashtag know what you own. And it kind of gets into, you know, this kind of thought process. The third thing, just to hit upon last week's discussion, is screen time, right? You guys can record. So every day in the room, in Traders Lounge, right? So we have the Momentum Room and we have the Traders Lounge. Traders Lounge is the mentoring / anything goes, ask any questions, and the noisy kind of room, since obviously Momentum Room is, you know, clear cut, straight to the point. So the thing about recording is each day, you know, if there's a setup like CETX, if there's a setup like SNCA, I try to go into that and talk about what I'm seeing, talk about the key levels, and just like you saw on CETX, just like you saw on SNCA, you can go back through the chat logs, review it. But if you're recording, you could go back and record, or you can go back and review your recording along with the commentary, and it's going to cut your screen time learning in a fraction. So again, there's never a yes, no, you know, objective answer to level 2 tape, and you know, a lot of people look for that, right? A lot of new traders say, you know, what did you see that made you do X? And there's never that answer. It's a whole bunch of things kind of coming together, plus gut, plus it's a subjective feel. And that comes over time with screen time, seeing it over and over and over. And what maybe showed one time is not necessarily what's going to happen the next time. And so that's the problem with, you know, people asking the question, well, so you saw a bid do this and then the offer do that, so that meant it was a short, and then the next time you see it, it's a squeeze. So it always comes down to tape, volume, action, and kind of getting a feel for what the key levels are. Forget about trying to figure it out. focus on the levels, focus on the volume, focus on where certain spots are acting as kind of like magnets. We talk about magnets a lot. And at that point, you're going to start to get a little bit more clear view. And understand that when you think it's a short, always expect that one last push. Always expect one more push. And then it's going to keep you a lot more safer than getting too aggressive. The last point that I wanted to hit tonight was your screen space, right? So on my screens, I typically have my E-Trade account over here, which is my trading and IRA. I've got Centerpoint over here, the main part of it, but then positions, orders. I've got my all my charts, level 2s, time and sales, trade ideas, equity feed, which is now scans, and then I have other screens, scanners, charts on these monitors over here, which is great. But I found myself not looking at particular ones. So what I did is I just removed those, and I started to put other things that typically I'm over here clicking back and forth, back and forth, back and forth. The idea with multiple screens, having a lot of screens, is that you don't have to always click back and forth between windows. It's not about, being able to trade 9,000 things at once. It's about not having to click, this window, then move this window on top, this window on top. It's about avoiding that. So I looked and I was like, you know what? I haven't looked here. I haven't looked here. I haven't used this here. And so I reorganized things. So it's always good to kind of refresh, because we get stale, and, we don't want to change anything. We don't really think about it. But who knows? Maybe that one change could lead to your next big trade. So I always try to kind of look at the spots that I'm looking at on my screens, and if my eyes don't go there, then it's time to make a change. And maybe I put it somewhere else where I would have seen it. And so that's one tip for tonight. Just make sure that you are using your screen real estate wisely, and if you're not, change it up. All right, so let's get right into Sunday/Monday night scan. We had a couple good opportunities over the last week. We had a lot of good swing trades. Cala was an idea from last Sunday night scan in the mid fours. It had a nice little breakout towards almost over 650 at this point. So we talked about the wicks. We talked about kind of what I'm looking for. So this is actually when it works out relatively perfectly. The wicks we talked about, getting bought up. So at that point, I liked dips to join for the breakout, and that's what it looks like. So hopefully you guys were able to take something from that. LMPX, these charts are working. Charts are working right now. And the key is, just make sure that one, you're taking profits into the squeeze moves, into the big moves, and two, be aware of what else comes into your names, right? So for example, this LMPX, you guys know where I was at when it was $8. I was swinging it, and it was a pretty nice trade. It never went away. It faded off, and then it came back. And then once again, you guys should see these wicks, right? This should be familiar to you now. We've talked about it for, I don't know, however many months of doing these Sunday scans. I've talked about these wicks on many different stocks, including SPCE, which we'll go over as well. But getting absorbed, and then nice little breakout. So because of that, I got long at the 31s, as noted on Twitter. And then the next day, it ended up gapping up, and we were up another $4 or $5. But unfortunately, as is the case, every day these days, newsletter came in and bought the top, right? So 90% of the time, I am happy if I sell when a newsletter comes in. The other 10%, yeah, I might be upset, but I remind myself that 90% of the time, they are marking the top with all their sheep that follow, all their sheep that buy. 90% of the time, they're putting in the top for you. So I went ahead and sold it all. Not going to deal with it, and got out. So I'll watch for this thing to reset back up. But again, that was almost $15 a share. That is a huge move. Even on 100 shares, that's a huge move for a potential risk of maybe $1 or $2. So those types of moves are working well. APLT as well, same kind of situation where typically it trades maybe 20, 30, 40,000 volume. Came in, traded a million, dip started to get bought. I bought, as noted on Twitter in the room, into the 39 flush. My goal on the swing was 50 to 60s. It went up and hit 53.20s. So I made it out around, I forget, 50 and change, 51. I posted it. And then the last bit's at mid or high 40s. So still not going away. Still, I think shorts are bent, so I will keep that on radar. But again, these types of charts, a little bit thinner types of trades are working. All right. Into what my main watches are for this week. So I got a lot of feedback as well. Boy Wander, BOIWONDR. You won the giveaway this week, so that's a shirt. I'm gonna send out all of the last 4 weeks this week. So if you haven't got anything yet, don't worry. I'm just not gonna go to the post office every single week. But once a month, I'll get everything out, ship it, so I owe a couple people that. Now, you'll get it, and each week, like I said, those of you guys that leave comments, those of you guys that are giving me feedback on what I'm going over, like I've said, I don't know what sticks with you guys. I don't know what's confusing with you guys. I don't know, these big key takeaways that make sense to you where it's just kind of second nature to me, right? And when you guys leave me that feedback, it allows me to kind of help even my own members more, because it's like, oh, that mattered for that person, and maybe I can expand on that. And so by you guys taking the time and doing that, that's why I'm kind of giving back to you guys for leaving comments that help me. So anyway, back to SPCE. Same conversation we just had on LMPX and KALA, the wicks getting bought up. If you go back about whatever Sunday scan it was in December, we had the same conversation about it getting bought up here, about these wicks getting bought up here, and once again, the wicks getting bought up here. Then you got a little tabletop around 12, and then away it went. The last two Sunday scans, I talked about how I was expecting this to go towards 15, potentially blow off, and ideally we get a $1 to $2 pullback type move soon. So at this point, we're into the 15s. We're also almost into the 16s. Trade idea worked out perfectly. But what I want you guys to notice, once again, dips getting bought up. They're getting soaked again. And also, it's gapping up and kind of fading off during the day, right? So if you started to get short and it fades off, you're going to probably stay short because it closed at the low compared to where you had it. Same thing, gapped up, faded. At some point, I think this is going to hit the fan. And everybody that's kind of adding, you'll notice that it's not breaking down. So people are just kind of adding to their position, adding. And if it starts to break out at some point, we're going to get that move. And ideally, we get a move to 17, 20, some type of big breakout. And if we do, then I'm looking to take that trade. The dips have been a good buy lately, so I'd be looking for some type of trend join versus VWAP. I always kind of use that VWAP level as a guide after 9:45, 10 a.m. But ideally, we get that blow-off move here. So we get that 17 to 20 blow-off and some type of unwind. GSX, I am watching for major parabolic move, major pullback. I mean, we've got some good volume here, about a couple million per day. This was 3 million. The volume's starting to get up there. The last couple days, it's also, ramped up, sold off, ramped up, sold off. So if you think about it, similar to SPCE, where if you're getting short and it's closing week, you're staying put. But then the next day, all of a sudden, it closes on the highs. You're going to start to get, it kind of ran out. You're going to get squeezed out. And this is exactly what I'm looking for to happen on SPCE, but it's happening on GSX. So higher the better, watching for some type of parabolic move or some type of failed follow through move after 9:45, 10 a.m. IMBI, great one. Faded this one off of the open on Friday. A little bit pre-market and then a little bit later on. Once again, newsletter, bought the top. What else is new? Unwind throughout the day. This was easy to borrow street-wide. So a lot of times what you'll see is a lot of like knee-jerk reactions, right? And you'll start to see a lot of end-of-day moves. So anytime that there's an end-of-day move like this, though, I like it less for a squeeze the next day because they squeezed out all the weak hands, right? So if somebody was short and you know they're maybe a level up, they know they're familiar. You know, they're trying to be patient with their trade. They're not going to get squeezed out. But given the fact that it was easy to borrow, given the fact that anybody could short this name, you get a lot of FOMO type, you know, fade. It's up, so it must be a short type players. And then they squeeze them out. And so whenever you have that into the close, like I said, next day I'm a little bit cautious, but ideally we retest up towards that level and then it fades off. Otherwise, 15 million shares. I mean, we easily could have another day, maybe on Wednesday, Thursday, when there's a buy-in of sorts. But for now, relatively weak, squeezed everybody out. I'm looking for any gaps to hit a wall. BLDP, I've been watching this one for quite some time. It's offered some great opportunities, but once again, what do you see? You see the wicks. So the dips are getting bought up, dips are getting bought up. So this means do not underestimate where it can go. Look for that squeeze out move. Look for the parabolic move. And at some point, we're going to have an opportunity. But this is about staying familiar with the chart. This is about waiting and not getting exhausted on the front side, right? So you know that there's a buyer in there. You can see that they're buying it up. So to me, that means don't size in, don't fight, don't expect that it's going to break down until it breaks key levels. So you always want to go back, look left, look at where it actually consolidates. A lot of times I'll just go back and kind of look at key levels. So you know, I'll look at this 11 level. I'll look at this 1130 level. The prior low was 1170s. So 1170s is my immediate level where that was the base on Friday. After it was running, pulled back into the close, based 1170s, and then started to go back up. So I don't want to be aggressive unless 1170s now becomes resistance. Until then, expect it to do the same thing. Pins, higher the better. This one had a nice breakout, reversal anyway, on the daily. And it came right into daily chart resistance, actually. You can see this, or daily chart VWAP. You can see the blue line. Just like we use it on, you know, an intraday level. You can see how it stays under that level. You can also use it on a daily chart. Gapped right into that and almost filled that gap. But got short out of the gate, let it work throughout the day. There was a seller there all day. So what I want to see is I want it to kind of go back up to maybe 2330s, 2340s, and then look to fade it down on Tuesday. Otherwise, you've got a pretty nice base here forming at 23. So the edge is 2330s, 2340s. Otherwise, you should expect that 23 is going to be a little bit of a base. And until that level gets heavy, I'd be cautious being aggressive on the short side. And last but not least for the main watches, and I got a lot of feedback with how I've been categorizing the watch list since last Sunday, so I've started to do that for IU members as well. Basically, I put my main watches and then I try to categorize the rest into different categories. But NK, this one has been also very easy to borrow street-wide. You can see it's closed under this 750 level twice now. So to me, that means that there's probably a seller in the 750 range overall. Hopefully we get some squeeze out type moves. Friday was the first move that it was not easy to borrow street wide. You actually had to locate it. But big volume, big squeeze this day over here, 32 million shares. I'm looking for a move, $1 to $2 opportunity, and you just have to wait for it. We have to wait, and I don't know if that's up or down, but I know it's going to be a big potential. We have 32 million shares of shares to potentially unwind. Obviously not 32 million, but any day there's a huge volume bar, I always look 2-3 days out to see what how it's setting up and whether or not that adverse move could happen. So whether it's going to start to squeeze or whether the sellers are hanging around and all of those buyers have to kind of unwind. So we'll see what happens. But again, this is not about making a call whether it's going to break out or break down. It's more about knowing when there is a potential move coming, and that's really the key here. So all lower highs. You can see it starting kind of base 720. So if I wanted to short, I want to see 750s kind of peak and 720s confirm, and then maybe scale in anticipating 7. But for now, I expect the volume to really calm down a little bit. But I could see this going to 9 just as easily as I could see it going to 6, maybe a little bit lower. But I think they need to work out the shorts, and once people stop caring about it, I think we'll have a little bit more of a clean trade. So we'll see what happens with it. But again, I'm not bullish or bearish. I want to be prepared so that when and if the trade does set up, I'm ready for it. I'm familiar with it. I've seen the chart. NKTR, this one I've kind of, this has been my plan the last couple nights on scan. I mean, I've said higher the better, looking for unwinds, but I didn't get there, and you can't trade them all. But once again, higher the better, potential gap fill under 22s, and maybe we go even a little bit lower. So pretty big squeeze day this day, and then completely unwound. And so we might want to go back and test those 22s to 20s, and maybe even lower at that point. But missed it. That's okay. But these are the types that I like to get on the right side. Not necessarily be aggressive, but get on the right side of it and put it on a chart over here. Just kind of have one eye on it, but it's working for me while I'm trading other things, that are on my main screen over here. KPTI I've been watching for quite some time. It's had a huge move. If you guys remember back in June, I guess it was July. Yeah, that's right. It was July 4th, the day before. Nailed that move. But it's literally gone nuts since. But I had shorted a little bit this move and this move a little bit. But I think that we could still have a pretty big unwind. It's been a pretty strong move. I think we could come back and maybe retest these prior support levels in the 15s. Higher the better. It's a lot like AMRN, right? Where if you mention it negatively, everybody's going to come at you and tell you why it's such a great stock, etc. But with that said, higher the better. And if you look, you can kind of see steady sell the last couple days versus VWAP. So basically, I'd be looking maybe 1720s up to 1750s. So if it popped up 1720s, I'd want to make sure I have room to 1750s. Otherwise, avoid the trade. You're going to be too emotionally attached. Maxar, this one has been a fantastic breakout. It's been consolidating the last couple days. You can see the wicks we talk about. So as I said earlier in the week, I'm expecting a $2 move soon. What way? I don't know. But I know that there's going to be an opportunity. And that's a 10% move if there's a $2 move. So I'm prepared either way. But it's all about kind of knowing when that opportunity is coming. And it's close. And I'm not as I'm not bearish and I'm not bullish. I just want to take advantage of whatever way it breaks. But it's getting close to either, topping out once this buyer finishes, or it's getting close to a potential weak open, and we're not looking back. We're going to go 22-23. INSM, potential unwind type trade. So these were all under the failed follow through category. So basically anytime that I put them in that category, that means I'm looking, in my mind, higher the better, and then look for the backside. And so INSM, beautiful unwind. Each day it ramps up, sits back, ramps up, sits back, ramps up, sits back. So I'd be looking for the same. And it has come down quite a bit though. So I would not want to be fading this if it's over and holding VWAP. You can see that this entire fade has held under the VWAP level. So if you find yourself shorting it and it starts to go a little higher and a little higher, and then you scale in and it's a little higher, that's not what I'm looking to do here. JMIA, beautiful, great opportunities on Friday. We got the short pre-market over here at 860s, faded all the way down, reshorted. I didn't get this pop, but in this area, and flushed out nicely. I actually think that this could easily go right back. As if nothing happened, it could go right back to 6. So I'd like to watch for that. Obviously, you got to be cautious. This thing's been beat down for quite some time. And so, the possibility of a rally is real. But if the tape suggests that it's, staying heavy, it's not going to do, the big rebound that everybody wants, then I'm there. I'd love to fade it back to 6. Same thing with Tiger, TIGR, another one that has, failed every single time that it's tried to rebound. Both had huge volume. So you might have a whole bunch of new traders, whole bunch of new volume on the wrong side. So if that's the case, we could have a pullback that comes right back. Those moves happened very fast, very quickly, and they traded quite a bit on Friday. So we might have a new top that just got put in for the next couple weeks. So we'll see. As far as breakout watches, continuation watches. So these are charts that I like. Basically, I'll set alerts and ideally join if the trend is there. This CBLI is very interesting to me. I had this cleanup rally, then it pulls back, another cleanup rally. If it stays over $1 for 10 days or so, then this potentially regains compliance and whatnot. So you always have that PR, but I'm going to set a trigger, this 120 level and maybe 130s. But it's interesting. Somebody's obviously been absorbing it, and we'll see what happens. Still relatively low volume, but if it's over 120, 130, it could be an interesting one. APTX, this one, I liked what I saw on the intraday. It's kind of dips are getting soaked up and consolidation dips a little bit, comes back up. So it gave that little weakness to get anybody else that was on the fence out, and then it came right back up. So basically what I'd be looking for is dips kind of versus 450s, 430, 450, consolidate, and this could have a nice little breakout. POLM, nothing I'm excited about, but we're familiar with this name, and the first day had some huge volume. For me, trigger is 180. 170 starts the base. I'm interested, so I'll set a trigger alert. 170, 180s, 185s, and so on and so forth. So need a PR, need volume, but we'll see what happens. If the PR does come and this gaps up too much, then a potential short as well. INAP, I started this one the other day over here, and it closed up pretty well. It closed at the 135s or so, but I didn't take it off. So I'm just looking to see if this starts to basically form a trend over 110s. That was pretty much where I entered. And if not, oh well, I'll move on. If so, then great. JAN, very similar. I got long in the 380s. I was kind of it ramped to 480s, but I was focused on other things, so I didn't. I probably would have sold as much as I could, considering I was up about $1 a share. But watching this one for any PR, and again, I think 4 is really the key level here, some type of base. Former runner in the past, so see what happens there. Other watches just to be familiar with. SIG has been a nice breakout, big gap up the other day and consolidating. I want to stay familiar with it. If it starts to trend and base and hold at 30s, easily could be 32 and continue on, a breakout. Probably WW is a good example. It might do something like this where it had that huge move, consolidate, and then steady grind. Trying to see a better example. Can't think of any off the top of my head, but I would definitely want to stay familiar with it because it had great volume. If it starts to fail, then maybe we get another $2-3 type move. But either way, I'm interested because once again, it could be a $2-3 type opportunity, and I'd love to get on the right side of that, put it on this screen, let it work, and that's it. NEO and FCEL oddly are like the same exact chart. I think a lot of people are very short biased on both. And I think a lot of people are caught. So nothing that I'm crazy excited about. They're under the other watches just because I want to see this chart. I want to stay familiar because the day that it gaps up 50 cents, the day that it breaks out, the day it squeezes, the day it breaks down, I already know. I already know what I'm going to do. So just staying familiar with NEO and FCEL and, see what happens with those. And last but not least, SDC is going to stay on radar. Big gain on Thursday. This was A+ setup, and was it Thursday or was it Wednesday? Oops. It was this day. So this was a beautiful A+ type move. There we go. Waiting for it to overextend. Finally overextended, gave that opportunity for edge because it moved up quickly. Started in, scaled in, flushed out. I did not get back in on the VWAP test for the next unwind. I only got a piece of it down here. But either way, it's been a great trader, great volume. So that's what I care about. So that's about it for me. So again, these are, the last couple are just charts I want to be familiar with. My main focus is very, very small. Guys, remember that you want to focus on the A+ setups only. Don't have that FOMO tomorrow. You're coming in on a Tuesday, long weekend. I just want to trade, just want to trade, just want to trade. Take a step back. Wait for the setups. 2, remember, volume trumps all. So you always need to know what you own. And, I'm not saying that SNCA was no-brainer, obvious that, you could have shorted and anticipated that intraday offering. No, that's not the case at all. But I knew not to be long. So the rest was, just being able to react, being prepared, knowing that it was a potential. And third was record your screens. And you don't have to record everything. But when you're in the room and when I start, going off on a particular name, the reason why, it's not necessarily to trade them, but the reason why SNCA and CDTXs and things like that are good to watch is because the moves are you can see it so much more on these crazy moves than you could see just on an everyday type name. So the moves are so much more distinguished on these crazy volume ones, and then what you can do is take what you just learned there and apply it to the other names. Last but not least, the other suggestion earlier was screen space. Make sure that, if you've got monitors, make sure you're using all of that space. And if you're not, if there's something that's been there for 6 months and you haven't even looked at it once, maybe reposition it somewhere else. And that could be as easy as, maybe you put a screen in front of you and then you put your TweetDeck over here and your mail, your Gmail, whatever. And maybe your eyes just need to be trained to look at different spots. So that's about it, guys. leave a question, comments, leave your biggest takeaway. And as always, once a month we pick a 1 month to IU, and the rest of the time we send you shirts, books, and a bunch of other good stuff. So that's it, guys. Have a great rest of your weekend, and we'll catch you in the room tomorrow.